Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Chainlink, the industry standard Web3 services platform, just launched the cross-chain interoperability protocol known as CCIP. More than a dozen leading financial institutions, including BNY Mellon, Citi, and DTCC, are using Chainlink, CCIP, and SWIFT to enable secure interoperability between blockchains. I'm here with Chainlink co-founder Sergey Nazarov, live from ETHCC in Paris on this July 18th. It's great to see you as always, Sergey. Welcome back to Trade Talks.
Great to see you, Jill. Thank you for having me.
You got it. What's your thesis around the multi-chain future of Web3?
I feel that there will be eventually a large single internet of contracts, similarly to how we have a large single internet that everyone knows and uses. Initially, though, there will be two separate Internet of Contracts. There will be the DeFi, public blockchain Internet of Contracts, and then there will be the private blockchain, bank chain Internet of Contracts. And both of these will have different amounts of value, and they will have different requirements about identity and other things. Both of these separate Internet of Contracts are enabled by CCIP, allowing them to transact across multiple chains. But these will kind of be these two separate worlds running on CCIP and connected within each other, within themselves, between chains, within those kind of separate Internet of Contracts. Then they will get connected together through CCIP when the legal requirements have been met for bank chains to send large amounts of stablecoin value, real world asset value, and other value into the public blockchain world, which should lead to a massive increase in the size of the public blockchain industry generally. So I think we'll end up at a single global Internet of Contracts, but it'll take the combination of the public blockchain world and the private bank chain world into that one larger Internet of Contracts.
What exactly is Chainlink CCIP, and what are the most exciting use cases it unlocks?
Chainlink CCIP is similar to TCP/IP for the internet, where you have a single global standard for communication between different systems, in this case, blockchains. So CCIP breaks down the barriers that stop blockchains from interacting with each other on the basis of transmitting information and value. And so the ability to transmit information means that you can string together multiple different smart contracts on multiple different chains into a single application, similarly to how you connect multiple different services on multiple different clouds to make advanced Web2 applications. And then the transmission of value across multiple chains basically means that the universe that will have access to a blockchain application launched on any chain will grow now to all chains. So instead of launching a blockchain application in one chain, and that one chain being the universe of value that can interact with your application, now you can launch your application in whatever chain you want, or even in your own chain called an app chain. And then through CCIP, you can connect to all the value in all the other chains, including public chains and private bank chains. So the most exciting use cases are really cross-chain smart contracts, where you compose advanced smart contracts that are able to be built out of multiple blockchains and to efficiently get value from multiple blockchains. And then the second valuable thing is the ability for value to flow between chains into new use cases. So that if you launch on your own app chain, if you launch on a bank chain, if you launch on a public blockchain, you can now access a much larger universe of value for your application to interact with. And both of those things, I think, are very fundamental driving forces that can take the industry to new heights.
Well, what's the importance of an industry standard interoperability protocol?
If you look at the way the internet works, it's made of industry standard interoperability protocols and other protocols. So for example, HTTP, TCP/IP, certain standards for email. Because everybody is on a single communications standard, all websites can talk to each other. Because we're all on a single email standard, all email clients can send messages to each other. So getting to an industry standard single interoperability protocol that can allow any smart contract to both connect with another smart contract and exchange value with it is a fundamental building block of the Internet of Contracts. And it'll have to be a single global standard, similarly to how the Internet is driven by single standards, such as HTTP, TCP/IP, and others.
How does Chainlink CCIP serve as an abstraction layer for enterprises looking to enter Web3?
So Chainlink CCIP will be connected to hundreds and eventually thousands of chains, many of them probably eventually company-specific app chains. And because it's connected to all these hundreds and thousands of chains, it becomes a single interface through which you can interact with all of them, through which you can send signatures, through which you can send commands, through which you can send value into and out of all these various chains. And so what you're really gonna see is that the existing native blockchain companies that started out building their system from day one as a blockchain-enabled system, they will use CCIP to send value and commands within public blockchains. But within the Web 2 world and the banking world, where there are already companies with long-standing systems that they have thousands of people trained on and billions and really trillions of dollars rolling around in, they will want to continue to use their existing infrastructure to interact with blockchains. And so through CCIP, they will be able to connect with hundreds and eventually thousands of chains so that they don't need to connect with every single chain. They just need to connect with Chainlink and CCIP, and then they will get access to hundreds and thousands of chains, allowing them to transact and interact with the Internet of Contracts. And this efficiency and this ease of integration into the Internet of Contracts will continually accelerate and bring on more and more large companies, which are faced with the dilemma of what chain do I choose? The what chain do I choose dilemma in the Internet of Contracts is no longer a problem. Similarly to how when you use the Internet, you're not choosing what cloud the service uses or whatever, you're just connecting to the Internet. And that's what CCIP should enable for large institutions that already have systems that they already have value and people trained on, is a very easy, quick integration into this global Internet of Contracts.
Well, Sergey, let's talk more about these traditional legacy assets. How do you see banks and traditional financial institutions helping to grow the entire blockchain industry?
So we've now seen banks engage in custody on a number of assets that were built by others on other chains, something that we said would happen a number of years ago. The next step for banks is actually making their own assets. Some banks have already begun making their own stable coins, such as Societe Generale launching their own stable coin onto a public blockchain. And I think you're going to continue to see pretty much every bank want to create its own stable coin. Then we're going to move on to real world asset tokens. So these are tokens that represent real assets out in the world. And this is what banks are actually very good at. They're good at securitizing and packaging assets and turning them into new products. Now you will have the crypto format into which to put those packaged assets, and this will be called real-world asset tokens. Those real-world asset tokens are valuable to both the banking industry and the public blockchain industry, because the public blockchain industry is very eager to gain new types of collateral. So collateral that is not wholly based on crypto and crypto markets and crypto prices. And having collateral like this, backing stable coins, backing various coins that are basically existing on the basis of the assets that are making them up, will be valuable. So what I see is, once again, these two Internet of Contracts. One is the public blockchain Internet of Contracts, often known as DeFi, continuing to get connected across multiple chains and grow the market by being able to launch a DeFi application in one chain, but gain access through CCIP to hundreds of chains and all of their value. And then the banks and the traditional institutions, I believe that every bank will end up making its own app chain, and every asset manager and everyone in the financial global financial system will eventually just have an app chain to represent them. And then those app chains and bank chains will need to be connected, and they will transact with each other. But then there will be a stage where the legal requirements are clear, and you can send value from the bank Internet of Contracts to the public chain Internet of Contracts. And at that point, we will see a single global Internet of Contracts, ideally running on CCIP. So banks and financial institutions, they have the tens and hundreds of trillions of dollars in assets to send into the financial products of the public blockchain world. And once the technical systems are there, which is what we focus on, and once the legal requirements are clear how to do that, then I think you will see a very large and rapid migration of value. You're already slowly seeing it by these banks making kind of subsidiaries and surrogate entities that do this and essentially are known for creating DeFi. And what I'm seeing there is that they're making their own stable coins. And even when you think about a stable coin, you want your stable coin to have as wide an array of markets and chains that it can be used in. So whether you're a bank launching a real world asset token or your own stable coin, you want as many chains as possible to get connected to in order for you to have the biggest possible market. And so this is what CCIP will enable for them. And then after enabling that for them across banks, it'll connect that value into public chains, which I think should ideally take our industry well past the 1 or 2 trillion it is now. And in the long term can, in my opinion, take it well past 20, 30, 40, or 50 trillion, because the crypto format is the format in which I think all global value will eventually be transacted.
Well, Sergey, why do blockchains have connectivity problems?
So they're siloed, secure systems that are unable to reach out to external systems either for data. Blockchains don't, in many cases, even know what time it is. They only know what block they are on. And likewise, they can't connect to any other blockchain. And this is often known as the Oracle problem. And the Oracle problem is the problem that Chainlink has invented original designs to solve using something called Oracle networks. Initially, those Oracle networks were applied to data. So putting the first market data into various blockchains, which gave rise to DeFi. Then we moved on to using Oracle networks for computation, various computations such as automation and others. And that has now become popular and has taken many contracts to the next level of their development. And now with CCIP, this Oracle network security model and the solving of this Oracle problem is how we have expanded Oracle networks to do even more and basically achieve this additional value of connectivity between chains, which I think is one of the key properties that you need to bring the industry to its full potential and realize this world of an Internet of Contracts.
And finally, Sergey, in the last minute here, what makes Chainlink CCIP the most secure cross-chain solution that's available?
Sure. So I think there's two distinct characteristics. The first one is that it's truly decentralized because Chainlink began solving the problem of Oracle networks. Many other bridges, what they do is they create centralized servers, which are run by the bridge team. And the bridge team then controls the server and controls the keys and controls the system. And we've recently seen problems around this with multi-chain where the system was in the control essentially of a single person. And now the people that were using that bridge have to find alternatives very quickly because that bridge isn't going to be functional anymore. So the first thing is true decentralization because Oracle networks were the problem we're solving. And in solving that problem, we created a decentralized environment that can properly do secure computations on many topics, which has now been expanded to cross-chain and has already processed over $8 trillion worth of transactions. The second reason is risk management. So we are the Chainlink CCIP is the first bridge to have a risk management capability, which means that every CCIP channel is actually 2 Oracle networks. It's one Oracle network to transmit value and to transmit information and messages. And this is what's known in internet infrastructure as a kind of a thin pipe. So something simple and secure and efficient. And then the smart part of the bridge is in a parallel Oracle network called the Active Risk Management Network that actively monitors the first channel to make sure that there is no risky behavior, bad transactions, fraudulent transactions, so on and so on. And this monitoring is similar to how all the value transfer systems you're familiar with monitor the transmission of value, whether it's a payment system or some credit card or some bank or something. Everywhere where value is transmitted, you have an active, robust risk management department that is managing the transactions and approving or disapproving of them. And so this is the first bridge that has the distinct, separate capability to actively manage the risk of a transaction being inaccurate or wrong. And I see that risk management capability continuing to grow and grow and grow in what it includes and what it monitors, and to eventually go on to include AI analysis and various other advanced analysis that basically allows you to transmit value and information at higher speeds for lower cost with greater security. Because when you're transmitting all of these things, that's really the problem to solve, is how do you properly transmit value and information in an efficient, high-speed way at low cost with high security. So you can do it in large volumes and enable as much transactions, as many applications as possible.
All right, Sergey, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you for having me. My pleasure.